All right. Um, I decided to do something to help. Okay, I deal with a lot of people, and I'm gonna use my other phone to show you this, to show you that I'm not lying, not lying, not lying. See, I'm gonna open up my Cash App, not my Cash App, my Credit Karma. Okay, there's my Credit Karma. I'm gonna sign in. I'm gonna let you people see it run up. Hopefully this camera doesn't. Yeah, there's a lot of blur with it. But if you look, there's a couple of 800s up there. Might be backwards on the screen. You know how these things go. But I've been wanting to tell people, as I've been telling some people, that these companies that claim they can fix your credit and they can eliminate this and eliminate that, they're bullshit. Okay? And I'm gonna call out the bullshit. The reason I'm gonna call out this bullshit is because they don't do anything for you that you can't do for yourself. And I'll explain exactly what mostly they do. What you're going to do is you're going to go to one of these credit fix, and basically they're going to get your information. They're going to get access to your bank account, and going to get a list of all the people you owe money. And what they're going to do is they're going to make these phone calls, and they're going to negotiate exactly how you can pay them back. They're not going to save you anything. They're going to pay you to make these phone calls for you. And then by giving them access to your account, they're going to make arrangements with these companies to pay off your debt. Now, like I said, you can actually do this yourself. And in most instances, you can ask to resolve your credit debt. Well, most of it. Some things are just too big, and people have to understand it's going to take some time. But you can do all this yourself. When I was young, my father told me there are three kinds of people in life when it comes to these things: people with money and no credit, people with credit and no money, and people that have both credit and money. The thing about that third one is that you don't know any of them, and those people will not help you with shit. So, I'm going to teach you a few tricks. Some of them you've heard, and some of them you've tried, and you got to know how to do it in order to actually work it out correctly. The first trick that you can use is not a trick, it's something factual that you do. You make a list, go into one of these credit apps or whatever, you're going to find out everybody you owe money to, all the money you owe, and you're going to make a list starting from the smallest number to the largest number. Okay? Those small numbers are the ones you're going to take care of first. Now, when you had my hat on backwards. When you deal with credit companies, what it is they're going to calculate your debt to income ratio. All of these things that you owe for is your debt. And you know what your income is because you got to pay taxes on it every week. But that debt that you have is going to have to be reduced. So by taking care of the smaller ones first, the ones that you could easily pay off, each one of those is going to remove a, what would you call it? I'm trying to remember the word. A account that's delinquent off your credit, and those, as those disappear, your credit score will go up. Definitely will. And I'm going to get into the funny part about that. Okay. Now once you eliminate those small debts that you owed, now you start getting into the middle ones and the bigger ones, and they're a little bit harder to get rid of. So what you're gonna do is you're gonna make that phone call and you're gonna make that negotiation. Here's something a lot of people do not know. These companies that you owe money to, though they have some form of power, they do not have the entire amount of power to say how much you pay. Okay, but in a negotiation, you're going to want to stick to that cost. The trick to it is, and even with the smaller ones, that is the fact that they're going to give you two options that you can pay your debt off. One is what is a complete payoff. Okay, so you say you owe $100. This is just an example. Well, you say to them, well, what would it take for me to get this debt erased? Now, usually when you're paying the entire thing, they'll negotiate up to 50% of the original debt. Most people don't know that. They don't tell you that. So usually you can get rid of that $100 for $50 to $75, maybe even $80. It depends on the company and how greedy they are. But no matter what happens, they're going to have to take your money. Who wouldn't? But when it comes to larger debts, what you're going to actually do is you can negotiate a payoff schedule. You say you owe $1,000. You say, well, I can pay you $50 a month. $50 a month comes to 20 months. Okay, that's the $1,000. But you can still also negotiate probably 75 to 85%, which will save you a few dollars. So instead of paying off $1,000, you pay off 752 to 800. It's possible. Don't let them tell you no. They want money, and the money you owe them is less than they actually needed from the service you got. Come on, they'll sell you a $10 item for $50 and then say you owe 55. But in all of that. So you've worked off most of your debts. Now, in most instances, even if you pay off all your debts, and I actually went through this, I paid off everything that was on my credit. That really only, I forgot to say this, I started fixing my credit. It was not great. It was like 520. Okay? But once I finished paying everything off, it only went up, I think it was about 665, 670. Well, how do you get more than that? Okay. Most people don't know that you cannot have credit without what they call revolving credit. Okay, you'll never be able to go into the dealer and get that car you want half the time with money down or whatever. I'll explain that because when it comes to money down, no money down, there are calculations that they use in order to get the maximum amount of money out of you. And your credit score is what dictates your credit rating, which is going to dictate your APR. APR is going to be your interest rate. So when you see those commercials and they say you can get a 2.3 or a 6 point, not 6, a 3.3, always pay attention because at the bottom of it, it always says as low as. Now, they never give as low as. Even with my credit, I'd have to actually negotiate to get the lowest interest rate, because their job is not to give you something at the lowest value, is to make as much money as they can from you. So you're going to have to get your score up. People with 620s talk about they're going to go get a house. Listen, I hope you have a very good job if you have a 620 and go get a house. And you plan on being at that job and having a good salary for a while. Because hmm, because they're going to give you an interest rate to where you're going to wind up paying. By the time you finish paying for, you say it's a $200,000 house, you're probably going to be paying in 30 years close to $300,000 for that house. So even when the house gains its market value, you might only wind up breaking even. There is no real equity. You want to build equity with property. So now you're in the 600s. You don't have any revolving credit. Best thing for you to do at that point is to get a credit card. Okay? Now, with your credit rating, you're not going to be able to go to most of these companies and ask them and get a credit card. Some of them are predatory. They'll give you a credit card with the hope that you will actually destroy yourself. They don't care. You're going to spend a lot on that credit card, and they're going to put that on your credit too. So that all that work you did, you wind up going down. Your best bet when you don't have credit is to get what's called a secured credit card. Secured credit cards are self-finance credit cards, meaning that the amount of money that you give as a deposit, that is your credit limit. So you say you give $300, you have a $300 limit on that card. Okay? And the best places to get these cards are at credit unions. Major banks will turn you down for a secure credit card. Very easy. Very easy. And it's your money. So you go and get a secure credit card. And I'm going to teach you the trick on that. Now, if you actually look at some of these credit apps, they'll tell you that having a balance up to 30% is not a bad thing. When you hit 30% of your credit utilization, you're seen as a risk. Okay, because it seems like you're spending more money than you have, and they think you're going to wind up owing them money, and they're going to have to go through a little bit of work to get it back. They don't want to work to get their money. The best bet that you could do with a credit card is have a zero balance at the end of the month. You use that credit card for gas, things that you would usually spend money on. Now, you have $300 worth of credit, never go over 100. Okay, and make sure you pay that 100 back at the end of the month. If you don't pay that money back, the interest rates on those cards are ridiculous. You're talking about anywhere from 18 to 24%. Now, on $100, that's $18 to $24 compounded interest. They're gonna hit you, and then they're gonna hit you with a late fee on top of that. So that $18 to $25 just turned into $40 to $50. So you got to pay close attention to those cards. Now, in most instances, if you use your card responsibly, after 1 year, they usually convert that secured credit card to a regular credit card and refund you your original $300. Depending on what company, what bank, what card, and how you manage your money, I've seen anywhere from $1,500 to $5,000 being given in credit. Honestly. And once you establish that, you're actually building on your credit rating. Now, you say you're at a 620 when you get the secured card. I believe about 620, 625 is the average on a secure credit card for most banks. Um, After, I'd say, between 3 and 6 months, they're going to give you increases in your credit limit. They do not do this because they like you. They do this because they want you to spend more money than you can afford, because they make money off of interest and late fees, nothing else. So they're going to give you these monetary increases, and after that year is going to go up. Honestly, most people don't understand this. You are not going to get a high credit score with one card. You're going to get a decent credit score. That first card, it'll put you up into the 670, between 675 and 700. It takes multiple cards. When I did it, I believe I had two cards before I hit 700. And I thought I was doing great when I hit 700. I'm gonna teach you about 700. Um, but it'll work. It will work. Now, once you hit that 700, they have something called the 700 Club. The 700 Club is something that you will love and something you should fear. The 700 Club is when they start telling you no money down, which sounds great. But just remember that no money down means higher monthly payments. Now you get something with no money down, high monthly payments, that becomes part of your credit utilization. It's ugly. Okay? That debt to income ratio can screw you up, because they're going to allocate a certain amount of money from your monthly expenses towards that. Oh, he has to pay rent. Oh, he has to pay lights. Oh, he has to pay gas. Da 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 da. And that's gonna push you into a different series of debt problems. Now, you can work that out. Okay, just pay close attention to what's going in and what's coming out. A banker once told me, I don't know how true this is for all banks, but he told me when I got one of my vehicles that with every $1,000 that I put down, that would eliminate $20 a month from my monthly payment. So if you gave $5,000 down on a $30,000 vehicle, which leaves $25,000, now you're saying your payment without that would have been about $500. Not saying that's what it is, just throwing some numbers up. Well, that 500 goes down to 400 because it's $20 off of every thousand, which $400 a month is not cute, but it's what you have to do. And that's a brand new vehicle. I'm not talking about something old. If you're spending $30,000 on an old vehicle, you got money problems. Okay? You shouldn't drive a BMW if you got Hyundai money. Nothing against Hyundai. But that's basically how you can work that out. And by maintaining that, don't expect quick jumps. Every time you apply for credit, there's something called a hard inquiry. Okay? Now they take about 2 years to come off. Too many hard inquiries will drop your score. Every single hard inquiry can drop your score 5 points average, but you get those 5 points, probably even more back after a few payments. Don't worry about it. There's a bank here. They tell you, well, you get a vehicle with us for this APR. You don't have any payments for the first 3 months. Well, what you don't know is that during those 3 months, you don't have any payments, but you're still picking up interest. Interest is occurred daily, not monthly. Don't let these motherfuckers fool you. Okay? So if you say you have a 5% interest rate, which is it's decent. It's not great, but it's decent. Your payments are $400 a month. Well, they're gonna take that $400 payment. They're gonna divide it over those 30 days, and then charge you 5% interest on each one of those days. So, I'm not a calculator. So you say it's $15 per day. So you're spending 5% on that $15 on the first day. Wait a minute, 5% on the $30 the next day. It'll get you. Best thing you can do with auto loans and house loans, anything really expensive, is whatever the payment is, you give them more. Best thing you can do is chip into the interest and get that the principal down, because principal interest is only charged on principal. Now, it's something that I found out the hard way, that even if you say you get a car $400 a month, you have some money, so you throw a little $4,000 down. Okay, that's 10 months of payments. That does not mean next month you don't owe a payment. They're still going to charge you interest. They're still going to collect payments. If you give extra money, they're trying to take the extra money off the end of the loan, not the present. So the total that you owe will go down, but every month you still owe the same $400. You can pay extra and get ahead, but you're still accruing interest. And as long as the principal stays the same, they're going to charge interest on that. Recently, I believe it was November 2022, I paid my car off. I paid my car off by doubling up the payments. It hurt for a long time doing it, but as you see with credit score, did me some good, because I paid off my vehicle 2 years early. Was it 2 years? About 2 years. With all of these things, you have to stay ahead of them. If you're not staying ahead of the bank is going to have his thumb in your ass, and you will be a human lollipop. What they call them? Ring pops? Yeah. Okay, you're going to be an all-day sucker, and they're going to hit you with every penny interest they can find. And I'll tell you who you watch out for. Always watch out for store credit cards. Your Lowe's, your Walmarts. Those store credit cards, Macy's, Bloomingdale's, Sears, blah, 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 blah. They're the worst. They're the worst. I have a credit card. I owed, I believe it was $19, $18 and change, which was nothing. Well, I forgot that I was supposed to pay this bill, and I paid it the day after it was due. The day after it was due. They hit me with a $4 late charge. No, it was $1 and change in interest. And then they hit me with, I believe it was like $17 in a late charge. $17, $18, something like that. I paid almost as much in a late charge as I did for the items that I bought. I'm not going to shout out the company. I still do business with them. I don't want them to get mad. I need my shit. But beware. Okay, stay on top of it, because if you slip, their hands in your pockets. Well, the big thing about credit is, don't expect credit to instantly change. Okay, most monitoring companies, if you pay your bill, you say you pay off something in the right after it's due, but it's too close to the. Let's just say you paid off when it's due, but it's too close to the end of the month when they do their report. They will not include that payment in that report. They won't include it till right after. Oh, I have to go back. Oh, I forgot to tell you something. Um, when it comes to paying things off, I'm going to teach you. There's a little trick. Okay, you say you owe somebody some money. You call them, you make the arrangements, and you pay them. Okay, what you're gonna do at that point? You go into one of these little apps, Credit Karma or Credit Wise or whoever the hell it is, and they have dispute centers. Okay, so once that payment clears with that company, you say you use a debit card, which means they're gonna take it out of your account immediately. Wait 1 or 2 days and dispute it. What that actually does is it forces these credit monitoring companies to immediately get in contact with the people that you owed money to. And they have to tell them, well, he paid it. And within the next 7 days, they're gonna take that off your credit report. Like that. It is not hard. It's a cool trick that I tried one time and found out it worked, and I just did it every time. Every time I pay somebody off that was a delinquent account, the next day I disputed that account, and within 7 days, it was taken off, and my credit score kept going up. It's not hard. I actually have a guy that I gave a lot of this same information to. I mean, he was bad. He was he was hovering around 500, something like that. And I say about 3 weeks ago tomorrow, he came to me and told me that he listened to what I told him, followed a few simple rules, and right now he's at seven. He's in the 770s somewhere, and it's been about, I'd say, about 4 years. Like I said, it's not quick, especially when it's really low. It's not quick. Okay, when it's high, it's not quick. I'll even correct that. I was actually hovering. Like I said, I've been in the 700s for 5 years. It took me it took me 5 years to get to 800, and that's really being motivated to fuck with my credit. Watching everything, I think I got sick just worrying about my credit. Blood pressure goes through the roof. But like I said, if you want me to figure something out when it comes to this, drop a comment. I'll get in contact with you if I can, when I can, text message or email or something. Like, click, subscribe, share. I haven't been telling people that because, I mean, you do it if you want. But I'm trying to really get this up to where I can go live. And I don't have enough subscribers to go live. So, um, give it a little share. Get more people tuned in. Not every video is going to be educational at all. I'm honest. It's not going to be educational. I'm gonna really shit on some people every once in a while. I actually have a few videos coming up, maybe some shorts. But let me get out of here. It's a day late and $1 short, but I'm still putting the videos out. Be easy.